Dislocations are there at all points in time, but volatility amplifies those dislocations.
Now, in terms of trading strategies that you could talk about, you've done a lot of work recently on trading equity indices. So maybe we could talk about one or two of your strategies, starting with that and see how your approach gets applied to them.
Yeah, so I think maybe I'll sort of talk about two of our strategies, right? So we have a strategy that trades equity index futures, and which I think is interesting because most quant equity managers or even equity investors tend to use fundamental bottom-up approaches, right? Whether discretionary or systematic, and equity index futures investors typically tend to be more top-down, and a majority use some sort of momentum measures, right? So we essentially combine those approaches, right? And our focus is on understanding how single stock investors operate, which we know through our strategies. And we also understand how top-down investors in equity index futures operate. And these differences in approaches give rise to dislocations from time to time. And what we find is that dislocations are there at all points in time, but volatility amplifies those dislocations. So the higher the volatility during periods of stress, these two investor classes, the cash investors and the index futures investors, behave very differently, and it opens up opportunities. And the strategy that we operate is positioned to take advantage when the volatility gets elevated. So I can't predict when volatility will get elevated, but we want to make sure that when it gets elevated and those dislocations open up, we are there to take advantage of that. So we implement that through a market neutral index futures strategy that combines both top-down macroeconomic and bottom-up stock specific signals, and with use clearly a lot of data, both conventional and alternative data, as well as machine learning AI methods. And the end result is that it reacts faster than traditional trend following during periods of stress. So when you have periods like COVID 2020, Q1 2020, we were running that strategy live, and we saw that it was able to react a lot faster by being market neutral and focused on those dislocations between the cash and the futures market. So that's sort of one of the strategies. A completely different strategy is our mid-frequency StatArb strategy. This trades single stocks on a industry neutral, sector neutral, market neutral basis. It currently trades the US, and we are expanding that to Europe and then eventually later this year to Asia. And the holding period here is about 2 to 3 weeks. Makes extensive use of alternative data. So all the different alternative data categories that I mentioned earlier in terms of credit card data, transcript, satellite data, supply chain, imaging, mobile tracking, et cetera, all of the data sets get used and combined to make forecasts over the next 2 to 3 weeks. Extensive use, in addition to alternative data, of machine learning and AI methods, both in feature selection, in model training, as well as in portfolio construction. We have been using, this strategy has been live for about 3 years now. The index future, 3+ years. Index future strategy has been live for close to 8 years using those approaches. So these are sort of two examples of strategies where we use extensive use of alternative data and AI and machine learning methods and combining them.
And just on the first one, the equity index futures one, I'm speaking now with our macro hat on. I mean, could you extract a signal on the macro environment in general from the first model? Because it seems like you're incorporating quite a lot of data, bottom up, top down. You have that volatility component within there. But does it also give you a signal about the macro regime from that?
So that strategy, the index futures strategy, we call that the GET strategy, by design is market neutral.
Yeah.
So
yeah.
Even if it has certain implicit sort of views on the overall direction, that's not what we are betting on by design, right? So
correct.
We are running a global equities market neutral, but we do country selection. So it does give signals on country selection, right? So it will pick specific countries where we believe equity markets will outperform and underperform based on both macroeconomic as well as bottom-up considerations.
Okay. And then on the stat arb approach, it sounds, quite innovative. I mean, what do other people in that space do? And how is your approach different to, some other fund that does stat arb? What would be the key difference?
So, although I think use of alternative data has increased, but I would still say vast majority of stat arb funds use price and technical data.
Yeah.
Right. I'm sort of overgeneralizing or simplifying, but I think the extent of usage of alternative data, certainly the way we use it, I think, and that's the feedback we get from our investors, that it has a relatively low correlation with even with other stat arb managers.
Yeah.
The other difference is that I think a lot of capital has gone into stat arb at the very short end, where the holding periods are intraday, a day or 2 days.
Yeah.
Mid-frequency is a second, again, important differentiator in the way the strategy is positioned. So I think mid-frequency focus, where we don't believe there is as much capital as is there sort of in the two extreme, right? So there's a lot of capital at the very short end. There's a lot of capital at the longer horizon style factor kind of investing. And there's some capital, but we think that it's a very interesting space, the mid-frequency. And that leads us to also use a lot more of alternative data, which that lends itself to that horizon. And then to use the alternative data effectively has led us to use machine learning AI methods. So it's a very interesting sort of combination of all three.
And on the alternative data side, again, there's so many different types of alternative data out there. If you were forced to just use one or two alternative data series, whether it's mobile usage, credit card, satellite data, which one or two or three would you think you have to have in your toolkit?
So, I would have been able to answer that question a lot more easily if you had asked me at 2018 when we first started. I think that's no longer the case today. And you have to use, so we use nearly 8 or 10 different types of alternative data. And then there are multiple vendors within each. And they work in different sectors. They work in different environments. And to construct a true sort of all-weather, no relation to the Bridgewater all-weather, right? But to construct a true all-weather strategy, I think you have to combine multiple data sets. And there's no sort of silver bullet, so as to speak.
I was hoping there was one. Now,